Awesome. So, being respectful of people's time, I think we can go ahead and get started. So, one, I am excited that you guys have all joined us today. If for those of you that don't know me, I'm the founder and CEO of Brown Investors. And this month, we're going to talk about the presidential election and its impact on the market. So we go through this every single time, but I'm going to tell you guys every single time because this is the core and this is the fiber of Brown Investors. So our sole purpose at this company, and the reason why I began it, was for us to bridge the financial literacy gap for people of color through increased access to education, portfolio management, and investing resources. So basically, this conversation is going to equip you. This conversation is going to equip you to make decisions about your portfolio. And I'll caveat this conversation by saying, right, we're not your fiduciary, we're not your financial advisor. Any information provided during this time should not be taken as investment advice, but we are absolutely excited to give you the tools to make your own decisions as you navigate and shift your money in your portfolios. So awesome. So today's agenda is around politics in the market, to invest or not to invest. And then we're going to give you a special treat at the end about one company that's positioned for takeoff. And I'll just say this for those who are going to stick around with us for the full time. This particular stock has grown 150% in the last 6 months alone. So you're going to want to stay tuned. All right. So when we talk about the impacts of politics in the market, obviously to level set and have like additional context on the time that we're in, obviously the presidential election is coming up within the next few weeks. And a lot of people are wondering what's going to happen to their portfolio and what does it mean when they see changes, increases or decreases, no matter what the change is, when the president is elected. So there's some macro trends that you should be aware of. So at a high level, stock performance tends to decrease in the years following an election, and bond performance tends to increase. That doesn't mean that it spikes a huge amount. It just means that you might see a slight decrease in stock performance in the year following the election. What we found is that it's not necessarily that is elected president or the party that takes office is the most important. It's more around if the White House changes political parties. So, for instance, if a party retains control of the White House, so say Trump is reelected, or alternatively, if the power of the White House changes hands, then you're going to see slight increases or decreases based on that. And the last thing that I wanted to just level set the conversation with is that when we talk about the election in this context of this presentation, I want you guys to realize that the presidential election or the presidential ballot and who's going to take office if elected president is only one component of what's actually, I guess, like up for conversation. So when we talk about the presidential election and the impact of politics as a whole, we're also talking about the Senate and the House, and who takes control from a Democratic or Republican Party or Independent Party perspective is more important. So we're going to look at what happens if the White House changes power and changes hands. What happens if the Senate, if there's a Democratic or Republican sweep. What happens in the House if the same thing. So the only thing that I will call out is that the Senate and the House are particularly important when we talk about the impact on the market, particularly the Senate, because there's additional focus on policy for taxes, spending, and regulations when we talk about the Senate. So I'm going to show you guys this graphic. I know this graphic is a little overwhelming, so I'm going to let you take a second to digest it. But essentially what this is saying is there's two things, right? So the potential outcomes of the election, according to the U.S. Bank, there's a couple of different probable outcomes or scenarios that could happen. So 1, the House could be Democratic. 2, the Senate could be Republican. 3, the White House could be Republican, right? And there's like these different scenarios, 8 scenarios, some of which are probable, some of which are improbable, right? And some of which have a medium to high likelihood, and some which are highly unlikely. But what I need you guys to recognize is the implications on the market is different depending on whether or not the House or the Senate becomes Republican or Democratic, and the same for the White House. So the first couple of scenarios are pretty, I guess, what we're calling market friendly, meaning there's less likely to be volatility if one of these first three scenarios take place. So that would be good. That would mean that after the election, the day after, or 180 days after, is more likely to be on our side as investors. But then what you'll notice is in the fourth and fifth scenario, if there's a sweep, meaning if the Democrats take a full sweep of the House, the Senate, and the White House, which is actually fairly likely, or medium to high likelihood, then we might see some short-term volatility. The inverse of that is also true. If there's a sweep from the Republican perspective, then we would also see some short-term volatility. Now, the likelihood of that is actually fairly low. So basically, the high-level takeaway here is that there's some pretty probable scenarios that could or could not happen, all of which have a different impact on the market, some of which are market-friendly, some of which speak to more volatility in the market, particularly if there was a sweep and a more drastic change in power. Okay. So, thinking more about what happens if there are different, I guess, outcomes in this upcoming election. So, one thing that I just wanted to level set and talk about was really what is the future of technology if President Trump is reelected. So I want to caveat and say this, like, Brown Investors is politically agnostic, at least from this perspective. But the point of this is to show, right, we know that there has been a rather, let's call it like tout or strained relationship between President Trump and the media. So while we don't necessarily care about his relationship to the media, what we do care about is policy that informs the companies that we invest in that are impacted by, I guess, his relationship with the media and the federal regulations he could put in place. So for technologies and industry, that would be one place that could be really impacted if Trump is reelected, particularly because there's more likely to be more stringent regulations and antitrust laws put into place, meaning, I guess, so, and if for antitrust, like action laws, basically are to protect the consumer from predatory business practices. And so an idea or an example of that would be when Facebook had to go through all of the legal like turmoil with sort of like proving their ideas about privacy and things of that nature. So under President Trump, do I think that means that if he's reelected, we shouldn't invest in technology stocks? That's not what I'm saying at all. What I am saying from a long-term perspective, it's more likely that he would have more strict and stringent regulations on the tech industry, particularly when we think about what falls in that umbrella. So let's give a very practical, tangible example. So a practical, tangible example is Google falls in that category. If we think about the algorithms that Google uses to advertise to us, or we think about Facebook, and we think about the AI they use and the privacy concerns, right? They might have to be more willing to bend or put different policies and things in place in order to be adherent to the stricter like federal regulations that he might enact if reelected. So from a short-term perspective, I don't think that it would be wise to, I'm not telling you to do this, but from my perspective, I'm not going to go sell off my tech stocks. I'm not going to go sell off Google or Alphabet, which is a parent company of Google. I'm not going to go sell off Facebook. But what I am saying is in the long term, from a long-term perspective, the future of technology stocks and the companies that I mentioned might be impacted if they don't learn how to adapt given their stricter regulations put in place under the Trump administration. So when you see these news headlines about Trump in a war with the media, I want you guys to also think about the policy that's put in place behind those kind of like conflicts that we're talking through as like a funny thing, right? So That's one thing. And then another thing that I would call out on this page, just around technology. So when we think about what technology is and it being a long-term versus a short-term play, for those of you that have joined our webinars in the past, we've always told you that at Brown Investors, our strategy is very simple. We find very wonderful companies based on financial indicators, based on some qualitative measures. We determine what those wonderful companies are, right? And then after we find those wonderful companies, we invest in those companies for the long term. We're not day traders. We don't proclaim to be. But what we do is we find those wonderful companies and we stick with them. And we get a return, right? So what we saw about a month and a half ago, for those of you that are aware and plugged in, there was a huge tech sell-off, which basically means investors were dumping their tech stocks left and right. And so if you were an investor that kind of freaked out, panicked, fell prey to this like irrational buying or selling principles that we talked about in the past webinar, what you would have done was sold off your stock as well. However, what we know is if you were in it for the long-term play, you would have stayed in your stocks, and a stock like Zoom, which was impacted by that tech sell-off, has returned to the value that it was at previously. And I think it at this point is exceeding that initial value where the sell-off took place. So my point here is to say there's a couple of things. There's a short-term consideration to the future of technology if President Trump is reelected, and there's a long-term consideration. In the short term, I don't foresee a need to sell off your technology stock. In the long term, if there are antitrust laws put into place that would cause stricter regulations on these companies like Google and Alphabet and Amazon that aren't compliant and they don't learn how to navigate, then that might be a consideration to move that out of your portfolio. So moving on to the next one. So this one is more of a hot topic. So a lot of you guys on social media, on our website, have been mentioning the cannabis industry, specifically because, I don't know if you guys know, after the VP debate, a few cannabis stocks definitely saw an uptick or a huge spike based on the perception that cannabis under Joe Biden the cannabis industry would thrive. Basically with the understanding that Biden is marginally or somewhat more friendly to the cannabis industry than President Trump is. And so let's just take a little bit of a step back and think about the cannabis industry and what's really on the ballot when we say we should be investing in cannabis or thinking about investing in cannabis under Joe Biden. So there's an expectation, right, that the cannabis legislation will move through faster if the Democrats are in office. And we saw that when I said the VP debate. If there is a stock that you follow or company that you follow by the name of Kronos, it's actually a cannabis company. They offer medicinal marijuana, medicinal cannabis, and they also partner with a tobacco company. And so they have like a very good footing in the market, and they saw about a 25% increase from the VP debate, right? So that's one thing, which means that the perception after the VP debate was, one, likely that people believe that there is a somewhat likelihood that maybe Joe Biden will be elected. And as a result of that, cannabis will be an industry that is legitimized federally. And so I wanted to talk to you guys about why that may or may not be true. So when we think about what's actually on the ballot in November, there's a couple of different considerations. So the high level point is that there's not a huge difference between how cannabis would thrive as an industry under Biden versus Trump, specifically because what Biden is voting on, or what's a part of his platform, is actually around the decriminalization of marijuana and the expungement of it from people's records, and not actually the federal legalization of cannabis, right? So because that's true, that tells us that in the short term, one, there is likely very little difference between Biden and Trump being in office. Now, there are some considerations around whether Congress is Democratic or Republican, or who's in power from a party perspective, but merely from a presidential perspective, the cannabis industry has about the same chance of thriving, right? So if you're someone who on election day thinks that if Joe Biden wins, you should go buy cannabis, I'm telling you otherwise. I'm saying that it would take about probably the same amount of time. And because it's not an immediate part of Joe Biden's platform, it's unlikely that the cannabis industry is just going to continue to thrive and take off, right? So that's kind of one part of it. And then another part of it is thinking about what does it mean from a long-term perspective for you to invest in cannabis? And also, where is it, or what states are it, like, is it actually a part of their ballot? So like for now in this election, there's only 5 states where cannabis is actually on the ballot to be voted on, to be legalized and sold. So because of that, you have to consider, when you look at these types of stocks or these types of industries that are considered hot topics or new and like a buzzword, what's actually on the ballot, one, and whether or not you should be investing in it from a short-term perspective or a long-term perspective. So in the short-term perspective, absolutely nothing's changing with cannabis. At least not right when the election takes place. And from a long-term perspective, it is likely that Biden might be more friendly to the cannabis industry, but it's highly unlikely that he would get policy through in a timely enough manner for you to make the return that you want to make on your portfolio, unless you just want to sit there. So like I said before, we're seeing some spikes because of market perception that cannabis might, take off. However, that's not something that I'm telling you to make a part of your long-term portfolio. That is something you can choose to make a part of your long-term portfolio, but that's nothing that I am necessarily advising you to do. So I'll take one step back and give you the high level understanding of kind of like what we've run through. So at a high level, politics absolutely shape market outcomes, more so from a short-term perspective than from a long-term perspective. So if you're someone who wants to move your stocks in and out rather quickly, then yes, you could probably benefit from the market perception that cannabis is going to do well. You could short your stocks, things like that, right? But from a long-term perspective, the same strategy is going to reign true, which is you should absolutely be investing for the long term in wonderful companies that you believe in because they have clean balance sheets with strong leaders, right? So when I talk about these industries like technology and cannabis, yes, they're hot topics and hot industries, but they probably will fare about the same under both presidential candidates. But when you add the layer of complexity around which party will take control of the House and which party will take control of the Senate, then we get into more complex discussions and conversations around how quickly policy can be passed through and what it means for these candidates and their platforms. And as you guys hear more and more conversation around these hot topics, I would also encourage you to just look at what's actually on the ballot. So when we talk about cannabis and we talk about the decriminalization of it, also considering that it actually has much, much less to do with whether it would actually be legalized at the federal level, right? Which would obviously have great impacts for the cannabis stocks and investors, but that is not something that is necessarily coming in the short term. Okay. So then I'll move on to, I mentioned to you guys, and I'm running through this rather quickly, so I'll give you guys an opportunity for questions at the end. But I wanted to talk you guys through one company that's really been positioned super well for takeoff. I think it's very slept on because it's been around for quite a long time. So as you see on the screen, Pinterest. So Brown Investors recommended Pinterest, actually recommended Pinterest twice. So we recommended Pinterest once in July. Obviously, it was on our list of wonderful companies prior to recommending it to our clients, but we recommended it in July, and then we also recommended Pinterest in October. And so as you see at the top of the screen, a little bit of bragging rights for us, right, is that we recommended it in July. And in the last 30 days, we've seen a 22% increase in Pinterest performance. So it went from $40 to $49 was the close yesterday. So that's a really big deal. And then I think the bigger thing that we want to call out is let's look at what happened over a 6-month period. So when we look at 6 months ago, so we recommended in July, but I have this view that shows you what it looked like in June, which it was hovering around a very similar level. And between June and October, so yesterday's market close, we saw a 150% increase, right? So the point here is to just show you guys that there are companies doing extraordinarily well, even in the midst of this pandemic. And it's important that you create that list of wonderful companies that we always talk about in these sessions. And once you create that list, you basically are prepared to invest in these companies when they hit their fair market price or fair evaluation price that we believe that's when you should buy, right? So you always buy at that price or below that price. So that is pretty much what we have for tonight. I know this was a rather quick webinar. I think there was some really concrete facts and strong information that we need to get in there. And then I can just open it up for questions if you guys have any questions before we kind of close it out. And I'll stop screen sharing and navigate to the questions. So the only thing, there's one other thing that I'll call out that's really cool about Pinterest is that it has nearly 400 million active users. And so I think someone called it out in the comments. So that's a very, very good call out from Brown Investors. All right. So at a high level, one, super appreciate you guys joining. I think the key takeaways is if you're a short-term investor, this might be the time for you to move in and out if you want. If you're a long-term investor that believes in the same principles that Brown Investors does, which is find your wonderful companies, stick to them, stick it out, ride it out, do not worry about the volatility that you might see, then that absolutely is what you should be doing during this time. Don't get distracted by the hot topics. So when you see tech and you see cannabis and you see the next big thing, that does not mean that you should jump on that next big thing. You guys have to be very, very clear on the platform of these candidates, how quickly they want to push this policy through, and also consider that the layers of complexity between the presidential, the change in power in the White House, the change in power in the Senate, and the change in power in the House are all going to impact your portfolio at the end of the day. So awesome stuff. And thank you guys. And then with regards to whether or not pins is still a good buy even now. So I think that's a very good question that we can absolutely answer offline, because I know you're one of our, oh, well, there you go. So yes, based on market valuation, but like I said before, please guys make your own decisions, but yes, it's definitely still a good buy. Awesome. So this was a very quick 30-minute session. I am so happy that you guys joined, and we'll recap some of this good stuff on social media. So if you're not following us on Brown Investors handle on Instagram, please do. We're gonna drop some more gems tomorrow. So thanks guys, have a great night.